Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, right from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll get you expert views to find out which are the sectors and the trends that you need to follow, the themes that will outperform in the current market as well. But first up, a quick check on how the markets are doing at this point in time. Both the Sensex and the Nifty have been trading in a very narrow range right in the first half, but right now things look brighter. 18,190, 59.60 points up for the Nifty. It's up at 0.3%. Look at the Sensex as well, 61,669, the current level. That's also up by 240 odd points at this point in time. So the market breadth seems to be improving. Let's look at the broader markets that were seen in a deeper cut of red. They have recovered from the day's low as well. Right now turning, trading flat with a negative bias for both the mid cap 100 and the small cap 100 indices as well. In terms of the sectoral moves as well, we are seeing a whole host of recovery coming in. The Nifty Bank is up into the green, 0.3% odd. Autos had been up in trade, they continue to be up. Financial services have turned positive. You're also seeing IT stocks continue to hold up that 1.5% up move. The metals have turned positive as well. Also, apart from that, we are seeing some comeback coming in on the PSU banks as well. The realty stocks are also up by 0.8% odd as well. So, barring some losses that are still taking place in, say, pharma sector, for example, or the FMCG sector, rest of the sectors have actually recovered from the day's low. So that looks like a positive sign for the markets. In terms of the top gainers and the losers as far as the Nifty index is concerned, the gainers do include the Adani group of stocks. Remember, we have seen the findings of the interim report submitted by the expert committee that was formed by the Supreme Court on the Adani Hindenburg case. Now, the interim report findings do suggest that there has been no regulatory failure that has been found as of now with regards to price manipulation in the Adani group of stocks. That's the big headline that has come about, and that has led to the movement in the Adani group stocks. Most of them are up in the green, with Adani Enterprises, Adani Ports up at the day's high, 3.5–4% up in trade. Apart from that, Tata Motors, Tech Mahindra, Infosys, some of the other movers at this point in time as well. On the laggard side, Divis Laboratories continues to drag. Britannia, Bajaj Auto, Power Grid, NTPC, the other laggards at this point in time. But time now to welcome our guest on the show. Madan Gopal Ramu joins in. He's the head of equity at Sundaram Alternate. Welcome so much for taking the time out, Mr. Ramu. And first of all, I wanted to understand from you, what is your own sense as far as the markets are concerned at this point in time? How is the texture looking like to you? We did see a bounce coming back last week. This week has been extremely volatile again. What does your sense look like as far as the markets are concerned?
Hi. Uh, we feel positive about the market from a medium-term perspective. Market has been consolidating at current levels for almost now 20 months now, but the earnings growth in India, particularly in the domestic-driven sectors, have been very strong, and which literally gives us the market multiples have come down at a very reasonable level. So anyone who's ready to take a 1 to 2 year view on the market, I think market valuations are now giving an extremely good entry point in our opinion. Uh, India growth story looks resilient, as has been able to handle the inflation and high interest rates. So right now, if you look at in 2022, you have been struggling with an increasing inflation and increasing interest rate. Right now, both of them seems to have come to an peak, and from here we can at least expect inflation to come down. If that comes down, it further provides strength to the consumption theme as well. So from here, if we look at, there could be some slight slowdown, but it may not last for a very long period of time. Therefore, any domestic-driven sector, we feel that the earnings can sustain and sustain the growth that they have been delivering. Therefore, we are positive on the earnings momentum as well, and therefore I think markets are giving a great opportunity because they have been almost consolidating at current level for almost 20 months now.
Hmm. Right. Sir, if you could help us understand, what do you make of the current issues of the debt ceiling in the US, and how would that really impact the Indian markets, whatever the decision really takes place there?
So I think all this issues that are happening in US from a debt ceiling point of view, from an what they will probably do on the interest rate point of view, all this relates to the FII flows, right? At the end of the day, when FIIs look at the various emerging markets, clearly India is standing out at this point of time. The major risk for India used to be the energy prices, which has been bothering us last year. But this year, if you look at the energy prices, have come down significantly. Until next winter, we can expect energy prices to be at lower levels. With that perspective, I feel at every opportunity, the FIS will look into buying into stocks which are looking attractive from a growth perspective over the next 8 to 3 year period. So I feel there has been a good amount of buying that has come last month. That's exactly what what is our base case as well. That the valuations have become attractive for people who want to buy and sit. Therefore, any correction, meaningful correction, I think you will see FIS coming and buying those stocks. It can be very stock specific, uh, but broader market probably may require a little bit of more correction.
Hmm. What about the IT pack at this point in time? You do say that domestic facing companies and sectors may actually benefit at this point in time, but we are seeing a stronger dollar that has led to a momentum in the IT stocks. Even some few sessions before also we did see continuous momentum on the upside. What did you make of the IT earnings this time around, and what does the future really entail for these companies?
I think the uncertainty on the earnings front will continue for at least another 2 quarters, it looks like. And the body language for most of the management, for at least from the short term perspective, is not looking great. But all of them are of the opinion, and given the kind of deal pipeline that they're looking at, that
Hmm.
once they cross through this uncertain period, they might look at a growth coming back. But we are not very sure and comfortable, at least from a valuation perspective. We don't think there is big money to be made. Even for a moment, you want to believe that next year can be a dramatically better year. So we would like to wait for some more period and would like to see, even if we want to add any stocks here, uh, we want a reasonable amount of correction, in our opinion, because there has been a reasonable amount of bounce back from the low levels in some of these mid cap names. Traditional IT companies, I think at best they can be a defensive bet at this point of time. So
Okay.
we don't see big money to be made, but if you want to be defensive on the market, then they do provide some opportunity. But yes, the uncertainty will be there for at least 1 or 2 quarters.
Right.
Probably you can wait for a better entry point here.
Okay. So which sectors do you believe will actually take the lead and outperform the markets in the next leg of the rally? Is there a safer spot in the banking and the financial names? Are there other sectors that you're bullish on now?
So, so we generally take a 2 to 3 year view at least. It's not a 1 year view that we take. Uh, our general guidance to the investors have been that if you want to play India growth story, which looks uh, much more resilient compared to many other economists, it's best played through the sectors growth cyclicals like financials, consumer discretionary, manufacturing, and in if you look at most of the sectors, they don't are not represented in the Nifty 50. So
Hmm.
the investor has to go beyond the broader indices and then search for sectors which are. If you look at most of the opportunities in the consumer discretionary, even in retail lending, to be specific, we are talking about. We have a theme where we look at financial inclusiveness as a theme and look at mid cap and small cap NBFC small banks. These are necessarily are available in the mid and small cap space.
Okay.
So I think we broadly are positive on the growth cyclical sectors and little bit more towards the mid and small cap space, but very choosy when it comes to mid and small caps. We are not saying go and buy the indexes here because
Mm-hmm.
they are as much as good stocks are there and as much as beta stocks are also there in indices.
Hmm.
So you need to be very choosy when it comes to mid and small cap space. But
Okay.
opportunities do exist there
All
if you want to
right.
make big money for the next say 3 year time period.
Okay, understood that. What about the defense stocks? We recently saw one of the fund houses really launch defense themed fund as well. Now, this has been one of the first, in fact, that we have seen this theme getting an NFO space as well. Your own sense of is this the right time to really look at opportunities in the defense pack?
Depends from all the all the kind of efforts that are being taken by the government looks a good bet. But you need to have a little long-term view if you want to really bet on this. Uh, People look at the order book and get carried away in different stocks, but they really take a long time to execute these order books. And sometimes timing is not, you cannot measure them from a quarterly revenue and profitability perspective. So you have to move beyond it. You have to take a little bit long term, and you need to be careful about not getting carried away with the momentum in this space. So you have to be choosy. We are looking at it closely. We are observing the trends there. We are happy to note that in some of these government defense programs, we are seeing a lot of effort is being taken to make it in India. We are looking at it closely, but opportunities, we still feel some bit of a correction there would help us to get into some of these stocks with a lot more conviction. As I told you, you cannot get into them with a 1 year view. It has to be at least a 3 to 4 year view before you make money in these names. And therefore, you have to wait for the better entry price, because all these stocks, with the kind of news flows that are there for the last 6 months or so, have seen a substantial jump in prices. But if you honestly look at the earnings, not many of them have been able to surprise in a significant manner.
Right. Is there any space where you would like to caution the investors from getting into it? Right now, you did mention that where there are uncertainties, especially export-related sectors, that is where the headwinds could further emerge. Anything apart from IT that you would like to add? Maybe a commodity space? How do you look at metals? Is that also a risky bet at this point?
Obviously, see, when we look from a long-term perspective to create wealth for the investors, the biggest problem sectors I see is defensive sectors. Generally, the dividend yield sort of sectors, which have been the highlight for last year, right? Given the kind of inflation and interest rates, people jumped into dividend yield stocks. But that scenario is getting behind us slowly, in our opinion, because the interest rates will start coming down, say 1 year from now. Therefore, people, whatever they avoided last year and whatever made money for you last year, probably that is not going to make money for you in the next 2 year time period. So you need to make that shift. That's the first point I'd like to say. And when it comes to mid and small stocks, I think a lot of money flowing into this space has pushed the valuations of these companies substantially higher. The investor has to be very, very careful about the earnings, whether they are matching to the valuations. Otherwise, you have a possibility that some of these stocks can consolidate for a very long period of time, even if they don't fall. So these are the two risk buckets that we see and try to avoid when we are picking the stocks.
Okay, understood that as well. Well, thank you so much, Mr. Mamu, for being with us on the show and discussing all these insights about various sectors, themes and trends that one should track in this current market, and where are the opportunities really emerging despite this kind of volatility as well. Pleasure having you with us on Business Today TV. Let's also look at how the markets are looking like. We're just about 15 minutes away from the markets to shut shop, and they are actually looking brighter than what we saw in the first half of trading session. Just like how I pointed out in the afternoon trade, that it is the 3 p.m. factor really that is playing out on an everyday basis. I did say that, we will have to watch out whether there'll be a bounce, and that's exactly what has happened. About 0.5% of a gain for both the benchmarks, and the small caps have also turned green. With the mid caps just a few points away from the flat line at this point in time. So increasingly the market breadth is also turning positive. Will this lead to a continuation of the momentum in the next week to follow is something that we will continue to track for you. And for that, you should stick with us on Business Today TV to catch all the updates from the world of business and stock markets. Do stay tuned onto other social media platforms as well to continue to catch up updates from the world of stock markets. Many thanks for tuning in.
In a show of unity after 5 nights of indecisiveness, DK Shivkumar appeared with Siddaramaiah as the deserving duo that won Karnataka for Congress.